African Oxygen is sub-Saharan Africa's market leader in gases and welding products. It is controlled by the Linde Group, a German multinational in gases, engineering and technology sector. Afrox has a market cap of 6.6 billion rand, a price to earnings ratio of 20.6 and a dividend yield of 2.6%. When you look at Afrox, Paul, and that dividend yield, it's much higher than all the other ones. Why is that?
I'm not sure. The yield obviously may be a factor of the share price having not done so well, but it's quite a typical story when you see a foreign parent, like in this case the Linde Group through BOC, which owns 50%, they always want their money back. So they suck the cash out of their global subsidiaries. So again, one of South Africa's oldest industrial companies, because oxygen was required both for welding and for people in hospital, you know, with a thing to make them breathe if they're battling. So the company, Alan Liversedge is what it was first called, became Afrox in the 1930s or something, and has really grown up with South African industry. They've got that handy gas business, which is, you know, the household LPG bottles. They've invested heavily in that. The Linde Group is really the worldwide leader in this kind of business, so it's a good parent to have. Look, it's been a bit up and down because they followed the fortunes of the auto industry, because that's who uses a lot of welding gases, as you can imagine. They actually spun off Afrox Healthcare, which became the Life Group, which is one of the most successful hospital groups. So to be fair, if you've been a shareholder of this one for a long time, you've done very well, because that thing now has a market cap of, I don't know how much, 30 billion or something. This thing, the left, the old parent company, is battling along with a market cap of 6.5.
Do you have stock in this one, Stefan?
No. No, Afrox, I think they let the ball slip a little bit. They had a very entrenched position in South Africa. Then in 2009, 2010, they had a bit of supply issues. One of their big clients, Everest Highveld, then cancelled their contract. It's now, they had to give a 2-year notice, and that is running out, I think, end of this year. They are running into litigation with a company called Columbus Stainless Steel for 207 million rand, also for supply disruptions. And then they're also in legal battles with ArcelorMittal. And then they just, in the interim statement, they notified the investors that the Competition Commission received a complaint regarding them and will be investigating. So, yeah, a lot of things that's really just not working for this company at the moment.
Is it Paul?
Yeah, so the LPG shortages weren't really their fault. It was the oil refineries down in the coast which, you know, shut down for repairs, and that was problematic though, because it meant no LPG to sell to their customers. They had a whole bunch of empty bottles. It's also a competitive industry, because their big competitor is a company called Air Products or Air Liquide, which is also a global multinational that is involved with this industry. So yeah, you know, taking it from all sides, not looking all that good. And then ultimately also, you know, the fact is they're, again, as I said before, tied to their customers who are manufacturing concerns and refineries and steel mills and, you know, smelters and all of that, which use oxygen to kind of jazz up and heat up the process. So that stuff hasn't gone well, and you're at the victim of the market and import prices and all the rest of it. So not at a happy situation.
So not hot for you.
Not hot,
Stefan,
no.
hot or not?
Not hot for me, unfortunately.